Good evening, everybody. Welcome to another episode of Black Diamond FX. And tonight we will just dive a little bit deeper into standard deviation projections and the way that I use them. All right. But before we get started, I would like to thank everybody that's been watching my videos, that's been supporting Black Diamond FX. Those of you that are new to the channel, you can follow me here, Black Diamond FX, Black Diamond _ FX on Instagram. And if you would like to learn to trade with me, learn how I use standard deviation projections along with my other methods in conjunction with each other together, because you don't use standard deviation by itself, right? So send me an email, blackdiamondfx@yahoo.com, if you're ready to join the team and learn. All right. So having said that, let's jump into it. All right. So first of all, what are standard deviation projections? What are they used for? So standard deviation projections are used to find price targets in your trade. Now, you guys heard me say that they aren't used by themselves to find trades. You have to have you use them with your strategy, like whatever trading strategy, whatever trading method you use, then you add the standard deviation projections to it to kind of, help you out a bit. All right. And I'm going to show you guys something. I'm going to show you guys how I do it. But first, these are my settings. Okay. Now I have two settings in one, two fib settings in one. I have my optimal trade entry settings, which is, of course, we have the 0, the 0.5, and the 1. Okay. And then I have my optimal trade entry settings at 0.62 and 0.79. Let me see if I can make this a little bigger for you guys. Give me 1 second. Let's see. Tell you what, I'm gonna just bring my settings up. Boom. Right here. All right. And these are my fib settings. Okay. My regular fib settings, 0, 0.5, and 1. My optimal trade entry, 0.62 and 0.79. And my standard deviation projection settings of -1, -2, -2.5, and the -4. Okay. Now, having said that, the -2 and the -2.5, those are the areas where I look to target somewhere around a -2 and -2.5. In between it is good. Is in between the -2 and the 2.5 is best. All right. And I'm going to show you guys. So first of all, before I do anything, before I put any standard deviation projections on, I go in the daily chart and I look and I see what's going on. And this here is AUD NZD. Now, I don't normally trade AUD NZD, but let's take a look. Okay, now this is on the daily. You can see we have been having some pretty much consolidation, right? But consolidation on the daily chart, that's a lot. You can find good opportunities in consolidation on a daily chart, but you still just have to be careful. Okay, so let's see what was going on here. So looking, you can see we were respecting these highs, but we also respected these lows. It's like price is making this wedge, this cone, this triangle. All right. So, and those of you that trade chart patterns, you can probably say price is about to break out pretty soon. You can see this what is this, a triangle? I think this is a triangle is what they call it. Because we have, hold on, let me see right quick. All right. So we got here. For those, then this is, I don't trade support and resistance, but this is for those that do. All right. And coming down, let's say support and resistance is so subjective. All right. So say like that. All right. And price came from up here. Well, it came from down, came up, boom, boom, boom. So it's going to break out soon. Which direction? We don't know. All right. It could break out either direction. But looking at this, let's look and see what happened. So we were respecting highs. Also, we were respecting the lows, right? So if we were looking at this and we see, all right, we're respecting these lows, we can buy. Okay. So where would we buy from? So the first thing I do is I look for a liquidity grab on the daily. So price is currently right here. where was the most recent liquidity grab? It was down here. See this wick? See how this wick came down beneath these lows right here, these wicks, and went back up into this little range, this little small, well, this range, let's call it this range right here. Okay, so price went back up into it. Okay, so what I do first, I mark it. All right, then I go to the 1. All right. So on the 1 hour, what I look for is this low that took liquidity right here. Okay. This is where I put my standard deviation on the 1 hour. Okay. So you go from this low to pretty much this high right here. Okay, so from this high to this low right here. And then you look, okay, so let's go to the 2 right quick. All right. So you see we have the -2 and the -2.5 right there, correct? So what you do is you go and look over to the left and look for an area of liquidity that may have occurred, that may be somewhere, that may reside somewhere between -2, -2.5. Okay, so if we go over here, what we have these little highs right here. We have some internal liquidity at this order block right here. Okay, this fair value gap, order block, whatever you want to call it. I'm gonna box it right quick. Let's say from here to here. This little fair value gap. All right, see that right there? And that would have been our target. Okay, so we will set that as our target. Now, or what you can do is just mark the -2 as your target. All right, but make sure there's something over here for it to target. Now, the lower time frame, oh, wait a minute, this is on the 2 hour. Let's go to the 1. All right, so on the 1, look right here, see these highs right here? Right here. This would have been a nice target right there. Right there. Let's see, maybe even this one right here as well. So either one of those, or you could have just kept it at that -2.5, that fair value gap right there. All right. So now you're going to look for your entry. Okay. Do we have an entry on here? Let's see. On my entries, let's take this off because we found our target already. So now we're going to look for our entry. Okay. So looking here, okay, price broke structure here. Okay, down. Well, let's go to the 15-minute. But that's where I like to go, 15 minutes for my entries. All right, and let's see what we got. Okay, so we got a little order block down here. Price broke structure here. Price broke structure here. Right. Boom, boom. Right there. Okay. And what happened? Okay, so price broke structure and then it came down, but it didn't come all the way down here. Look what happened. It came down. What was this right here? Fair value gap right there, or you might be able to call that a breaker block. All right, because you see, this was actually the 15-minute break of structure right there. All right, so right there, and then that formed our breaker block. See how this high right here, and see how it came up, came down, created this fair value gap. Boom, boom, entry right there. This was our entry right there. All right. So sometimes it's going to give you that on the breaker, and sometimes it's going to give you that entry, you know, that traditional smart money entry where it comes down below discount. I mean, yeah, it come down below 50% and hits, you know, somewhere below discount to like an order block here or a fair value gap, and then you just have to pay attention and see where it goes. Now, this happens a lot. These breaker block entries, they happen a lot. They happen real often. All right. But you just have to be on the lookout for them. And then look where price went. Would it have hit this area? Yes, it would have. It just would have probably barely tapped it here. All right. But then look, it would have came right back up and cleared you for how many pips? Let's see, from here to here, about 84 pips. And then right up in here, I said 89, between 89 and 97 pips. All right. So that was on AUD, NZD. That's what you would have gotten on there. All right. Now, a good thing you always want to do, pay attention to the direction moving in. And plus this, I probably would not have taken this trade myself because you just don't know when it's going to break out. All right. You want something a little more structured. So let's take a look at something else. Let's look at AJ. And this is actually a setup that I had on AUDJPY. All right. So, and on this one, let's see, what did I see over here? Let me erase this. Let me see, what was I looking at over here? Did I go to a lower time frame? Did I go to the 4? What did I see? What did I see? I don't even remember what I looked at over here for this setup. I don't even remember what I looked at for this setup. Go back to the daily. All right. If I can't explain it to you guys, I won't. All right. But I am looking for this to come down. Okay. Let's see if we can find one that's a lot more clear. All right. AUD, what is this? AUD USD. Okay. So on the daily, you can see it had been coming up, up, up. Now it was coming down, down, down. Okay. So let's see what happened up here. Because you see, we have that liquidity grab right up here. See that wick? It went up, wicked it, and came back down. Okay, liquidity grab. Let's go to the 1. And let's see what we can get. All right. So look, this is the 1 hour, correct? And look, let's see what happens. Price came up, came down, came up. Where did it break structure? Right around here. All the way over here. All right. So we will put our standard deviation fibs right here to here. All right. -2, -2.5. Let's see. Boom, right here. Y'all see that? See that low right there? That's to me, when you're looking for those targets in between the -2 and the -2.5, lows and highs will be the best targets. Lows and highs will be the best targets, okay? And so now that you have found your target, now you would just wait for your entry. So we go down to the lower time frame. Let's take this off. Okay, we can take that fib off. Let's go to the 15-minute. Scroll back over. Hope I ain't making y'all dizzy with all this scrolling. And look what we have. All right. Order block right up here. This is a more traditional smart money entry right there. I mean, barely just got it. Barely. Probably, it was like super, super close right there. All right. But that would have been your entry. That would have been your entry. And even if you would have marked this fair value gap right here, you could have got in on that entry right there. All right. And how many pips from here down to your target of here? 91 pips. 91 pips. All right. Which is not bad. All right. Now, honestly, I don't trade AUD pairs, not AUD USD anyway. My favorite pairs are GBP pairs. Okay. So let's take a look. Let's take a look at the GBP. Let's start with GCAD. These are my GBP pairs right here. GCAD. Okay, so what's GCAD doing? Pretty much moving side to side. All right. Look like, see, we took out liquidity here, came down, broke structure. Right here on this wick. Watch this. Let me show y'all something. Well, this is going to be too far back. I'm going to have to scroll too far back. But I just want to show y'all. See there? Just took liquidity. And look what happened. Came down. If I'm able to mark this here as breaker structure, what do we have? -2, -2.5. We have this close right here. Look, could have got there. All right. Didn't come all up. So look, -2.5. It didn't come all the way down to here. This was our best option right here. See how close it is? When it's close like that, you can set that as your target because it's real, real close. All right. It's real, real close. All right. And see, I did all this on a daily time frame. But let's see if we could find where our entry would have came. So we got our target right there. Okay, so now let's go down to the 1 hour. Scroll back. Boom. See how this wick back up here? Let's see. Let's see if we can go back to the 15. I don't know if it's gonna let me scroll all the way back. I'm using the free version. Waste not, want not. I don't waste my money. I can do everything I need to do in the free version. All right. So what happened? All right. So let me see if I can show y'all this. All right. So what happened? Price came. Okay, so we broke structure here. We broke structure there. All right, candle close. A break of structure, we want to see our candle close. If this just a wick, it's liquidity. But break of structure, we want to see candle close. All right, so our entry, see we had a fair value gap there. Then we had another smaller one right here. All right, up in there. Let's see if I would have stretched this one over. All right, and then mark this little smaller one here. Look at that, barely tapped it again. Break of structure, came back, barely tapped. Although this, let's go down to, let's look at the 30 minute and see something. Because that wick, that first wick, y'all saw that it kind of took everything out of it, took all the wind out the sails. This wick right here. All right. But actually, this wick right here, it was this wick. Let's see. I don't think it's going to 5. But y'all see how it did go back up to there. I guess there was some liquidity remaining that it didn't get. All right. And then it came back down. But that's why you're gonna look for your that's how you're gonna find it. And then once it gets that breaker, once you get your breaker structure, you're just gonna look for once it breaks structure on the 1 hour. Remember, we use 1 hour breaker structure for standard deviation. All right. And we can go down to 15 or 5 minute for our interest. But 1 hour is for the standard deviation projections. All right. Okay, so let's see if we could do another one. That was GCAD on the daily chart. What's GCAD doing right now? I want to say it's probably going to come down. I want to say it might come down. Let's see. See, it took liquidity out here. See how it took all this out? All right. So now let's see if I go down to the 1. Took it out. See, we broke structure right here. 1 hour. This could be this breaker structure. Up, down. This probably could be a breaker structure right here as well. All right. If I go to the 15 minute. But my standard deviation, let's see if I put it here or if I put it here. Let's put it here first and see what happens. What do we have between the -2 and the -2.5? We got these equal lows over here. See that? Liquidity. See those equal lows right there? Look at that. Boom. Now, if this is to come down, that's our target right there. Who is that? All right. I think one of my kids are up. All right. And see how it came back up, tapped, started coming down. But look, it came back up again. All right. Came back up again. Let's see if we go to the 15-minute. I'm sorry, y'all. I was distracted. I'm hearing somebody walking in my hallway. I know my kid's supposed to be sleeping. My wife is sleeping as well. Oh, that's nobody's walking. I'm hearing raindrops. I'm tripping. I'm about to go down the hallway and start beating up stuff. All right, so look, entry, 15-minute. Look, break a structure here. Look what happened. Boom. See these fair value gaps right up in there? Boom, boom. Hold up, right there. Boom, right there. See that? All right. Now it did come down. Let's see if I had put the standard deviation from here to here. All right. Look what happened. Went down to the -1. Came back. Boom. -2, -2.5. It did come down here. Down there. But see right here, we had internal liquidity. See this fair value gap right here? Right here. Boom. Boom. All right. Internal. So we had internal liquidity in between there. That's what it targeted. And then boom, right there. See that? Right up in there. So I'm looking at perhaps it coming back down because now we have the -4. Now the -1, you may be able to set that as a little target, but a lot of times at the -1, we get these pullbacks. It'll come down to your -1, pull back, and then come down. Okay. It'll come to your -2, a -2.5, that area, pull back, and then come down again. All right. And look, at your -4, what do we have around the -4? If we scroll all the way over, wait, let's go back to the 1 hour. All right. The -4 level down there, close to it. We got these lows like just above it. But honestly, I really don't target the -4. The -2, -2.5 is normally a lot of pips. And if we had gotten in this trade from here to here, 111 pips. So that's more than enough pips. If you're a day trader like me, it's more than enough. Okay. So not only do I use this, you guys see how it works for Forex. Okay. It works for stocks as well. Okay. Um, it works for futures. Let's look at futures right quick. Let's look at the NASDAQ NQ. All right. And this was a setup I found. When was this? This was last week. This was like last week or week before that. All right. But you guys can see 1 hour. All right. And I found my target, my entry right here. Oh no, over here somewhere. Wait, let's go back to the daily. All right. Oh, this was a secondary entry right here because it took liquidity down here. See how it spiked down and went up? All right. This was a secondary entry. 1 hour. See, it came up here, came down, took out this fair value gap, and then went on up. Boom. And now I'm looking at it potentially coming down. This is NASDAQ. If you trade futures, Boom, there you go. All right. And look what happened. Let's erase this. All right. So this actually took this liquidity here. So let's see. There to there. All right. This was the high. All right. Got broken down here. Structure was broken low. Mm, mm, mm. All right. Boom. Structure broken on the low side. All right. This may come up again. This may come up again. Let me see something. If I mark this from here to here, -2 minus 2.5, look, internal liquidity right here. See this fair value gap right there? Right there. See that? That'll be my target and that's NASDAQ. All right. So let's see what we get here, because right now we're just consolidating. So none of this looks like anything. All right. And let me see one more thing. If I use my optimal trade entry Fibonacci settings, I want price to come back up into here somewhere. All right. But it's really nothing I can really see going in there unless it goes up into that wick. All right. So we're just gonna keep an eye on it and see it come up. Once it starts coming up, I make it go down to like a 5-minute time frame. All right. And then see what happens, or maybe even lower. All right. But we just gonna wait on that one. Okay. Stocks. I was looking at Amazon, AMZN. And this is if you trade stocks or stock options. All right. So look what happened here. So I was looking at this. I wasn't really expecting this big old spike up here, but it happened. So got to deal with it. All right. But it did come back down into the range. And that's the daily chart. Let's go to the 4-hour with this one. All right. Go to the 4. See, I came back down into the range. All right. So now I'm just waiting to see what happens. Now, could this be considered a liquidity grab? Yeah, depending on the time frame. Depending on the time frame. Okay. Depending on the time frame. But this just, like I said, this candle up here happened after I drew this, after I hadn't drawn my setup already. All right. So if I had gotten into this, it would have knocked me out of the trade, of my stock options. Probably would have been like a put. I would have bought some put contracts on here. All right. But I'm still looking for it to go down there. And then look, see, we got earnings coming up tomorrow. Wait, February 1st. Okay. Tesla. Let's look at Tesla. TSLA. This will be the last one. I'm not gonna keep y'all guys too long. All right. Okay, so look. Ratio. So look what happened. Where's my target? Oh, this is my target right here. 292 on Tesla. And Tesla got earnings tomorrow. So we're gonna see what Tesla do. I want y'all to watch this one. See if Tesla go up tomorrow. All right. But look, we took out liquidity here. Okay, broke structure, came down, boom, came up. All right. Retrace back down. Okay. Now let's see. Perhaps another entry. Now this candle is not done. This is a daily candle. It's not done. But let's just see how it's looking so far. All right. So if that's a liquidity grab right there, all right, 1 hour. So right now we don't have any, on the 1 hour, we don't even have a break of structure yet for this to go up. So right now we just kind of waiting. We're in a waiting period. All right. Now on the 15-minute, we do from here to here. All right. See broke structure there. -2, -2.5. We got this block up here. Fair value gap. Boom, right in there. All right. But we want more than that. We want more than that. All right. So we're gonna wait. Let's wait on the hour. And let's see what the hour does. All right. But I just wanted to share that with you guys, man. You can do, like I said, you can do this with Forex. You can do it with stocks, stock options. You can do it with futures. All right. Just wanted to show that to you guys. Okay. And once again, go to Instagram, follow me at Black Diamond FX. And if you guys want to learn a little bit deeper in depth about how I trade, how I use standard deviation with smart money, all right, and liquidity concepts, send me an email, blackdiamondfx@yahoo.com, and make the subject standard deviation, all right? And just write your request in the body of the email, and I will get back to you. Thank you, guys. I hope you enjoy. Don't forget to like, comment, and subscribe, and I will talk to you guys later. Y'all have a good night.